I'm Coach Des with an S, not a Z. I'm your leadership architect. And if you watch my leadership series, you will understand that we are all leaders, regardless to what capacity. So in this leadership series, I want to talk to you about what life insurance is and have a deeper understanding because there's a lot of misconception out there. So let's keep it real and let's keep it cute. Cute meaning simple, okay? You have two types of life insurance. You have perm and you have term. Term is usually the ones that you have at your businesses when you go to work. That's what your company and your job offers you is term life insurance, meaning that it has a termination period of 10, 20, 25, or 30 years, and then it ends, right? So if you're not with your company that you're working for that long, when you leave, that policy is gone because the policyholder is the company you're working for. So what we help people understand is getting your own life insurance policy in conjunction with the one that you have with the company you're working for helps out tremendously because they get lower rates. So that's why they offer the term and it doesn't cost that much. But if you got a whole life insurance policy, some of those term policies have the ability to turn into a perm. It just depends on what the stipulations are. And that is something that you would want to ask and find out about. Now, in a whole life insurance policy, those will go into you're like 124 years old. That's why they call it perm, like permanent. Okay, because it's going to cover you for the rest of your life as long as you're making the premium payments. Sorry. Also, with perm, a lot of those have a cash value attached to it. And the cash value has a tax advantage that you're able to use at different stages of your policy's life term, depending on the type of policy and how it's structured. And there are so many different structures on the policies, but what I'm going to show you is a whole life policy with a $500,000 policy limit with the monthly payments at $400 a month for a woman aged 40 who does not smoke. Okay, those are three key factors: gender, age, and if you're a smoker or not. Now, there are some carriers out there that we use that will allow you to smoke a little bit, not the everyday chain smoker, but if you do happen to smoke, but it's not a very big habit for you, there are some carriers now that started at the beginning of this year that will allow you to be a light smoker and still cover you in their whole life insurance policies. Now, what comes with the whole life insurance policy, which I know a lot of you heard about, is IUL, Index Universal Life. And those Index Universal Life in conjunction with your whole life combined gives you the whole life death benefit of the $500,000 plus a cash value that grows at a compound interest rate of 12% interest. Okay. So for this illustration, we're going to use a 40-year-old female that does not smoke. Her payments are $400 a month. Right? Now, some of you are going to say, but I can't afford $400 a month. This side are assets and liabilities. If you look at your finances and look at your liabilities, I'm pretty sure between beauty products, clothing, coffee, and etc., going out to eat, things of that nature, you could probably find $400 that can actually move from your liability, which is no ROI, to your life insurance policy, your IUL, that will cover you with an ROI. Why does it have an ROI? I'm glad you asked. Thank you. Because at the compound interest, and you will only pay for 40 years old to about 62 years old because it's called an accumulation period. You have to accumulate the money. And once you go through an accumulation period, then you'll be able to get monthly payments at about $600 a month for the rest of your life. They're just going to pay you that money, $600 that would go towards and in conjunction with your retirements and any other things that you have put together for you. Now, this is only on a $500,000 policy. Now, a $500,000 may cover most of your bills and definitely a house, but there's a formula to how much money you should take out on a policy. But for this illustration, I just want to use a $500,000. Now, you could come and say, I want to, like I have a client, he says that by the time he's 65, he wants to have $2.5 million in IUL that will pay him out every single month. Okay, about a couple of $1,000s, right? A few $1,000s that will pay him out every month. He wants to have at least 2.5 in there for that purpose. Now, some people will look at how much they want for their policy. Some people will look at how much they want to pay monthly. So we can look at it from two different angles. You just have to let us know what you're comfortable with. With that, these payments go until you're 124 years old, which is called life. You still have your death benefit. So your $400, a part will go to your life insurance for your death benefit. The other part will go towards your cash value. Now, I put min and max up here because the life insurance policies have a minimum that you have to put in, which is the $400. And then you can put extra in there, a little bit more in there, depending on how your policy is structured. Okay. Now, this side I really want to kind of go on because that's your life insurance policy in a nutshell of what you get and the differences between the two. Now, you have liabilities, you have assets. A home is an asset. A mortgage is a liability. Now, why do I separate these two? Because if you don't own your home, it is not an asset. It's still a liability because you don't own it and it can be taken away from you. The same with the car, if you have a car payment. And then the other assets, as long as you own them right out, are land, property, ETF, stocks, bonds, mutual funds, business revenue. All of these things are assets. Assets is something that you want to look at because this is your financial spreadsheet. Your spreadsheet is in two columns: assets, liabilities. Assets have an ROI, return on investment. Liabilities have no ROI. There's no money because after you buy and pay these things, your utilities every month, you don't get any ROI on it. You get to use the products like your lights, your water, your clothes, your shoes, your makeup, hair, whatever it is that you're buying. You get to use the products, but if you had to go sell them, that's where your return on investment comes from. You can't sell your utilities. You can't sell most of your bills. Your bills are your bills, which is why they're liabilities. It's better to understand what is your liabilities and what is your asset. And it's one simple question that you ask yourself: will I sell this to get money from it? If you cannot sell it to make your money back, either breaking even or more, it is a liability. If you could break even or gain, I call that an asset, because even though I broke even, I didn't lose. So most people say, well, breaking even is not an asset. If I don't lose no money, it is. Because if I go back to where I started from, I'm not going backwards. I'm stagnant. Make better choices. Get some better options out there. Connect better to make better and have better assets with the return on investment. Life insurance is an ROI product. It is a return off of your investment because as you're putting the money in there, through the accumulation period and making the payments on time, you will be able to turn the money that you're using, just like you do with your mortgage and your house payments, and you pay on them until you own them. Once you've gotten out of the accumulation period on your life insurance policy, the IUL, whole life insurance policies, because term life doesn't have an ROI because it only goes until that term and then it's done. You'll never get anything out of it. Now on the whole life with the IUL, you will. On annuities, you will. You know, you could take your 401k, your 403b, your lottery winnings, your settlements from lawyers, anything where you're getting a large lump sum of money, that lump sum, you're going to be able to put it directly into your IUL and start compounding your money. Like, come on. I mean, you get a settlement, you get a lottery win, you have a 401k, a 403b, you have a retirement plan. Put it in here. Why would you take it and go spend it on liabilities when you could turn it into an ROI and turn it into an asset and put it in the IUL? Come on. And you could still have access to it because now you're your own bank. So now you have access to your money and you can pull that money out with a tax advantage as it's still growing compound interest on there. And you could do it within 30 to 60 days. Just be mindful that whatever is left, if anything happens, that's your family gets the rest of what you haven't spent while you were living. But while you're living, have access to your money. Have access to it while it is growing money for you, and not spending it all on liabilities, on vacations and shopping and all these things. That's a liability where within a year you're cash poor, 2 years you're cash poor, and for some people 3 months. Like, come on, let's be smart about it, because during these times, if you're complaining about the inflation, you should be looking for ways to inflate your money or with compound interest. And this is for you. Help us help you. We're out here to help as many families as we can with the times that we have right now. This will help you. This is for you. We're not going to sit there and do some jargon that you don't understand. We're going to be there until you understand it, and we're going to explain it simply, so we're not talking all these terminologies that you don't understand and confuse you into signing something that you're not sure about. No, when you sign it, you're going to know you made a big step towards your future plans, your legacy, and also being your own bank. No credit check, no red tape, no waiting for your application to get approved and sitting on pins and needles. You can access your money. It's your money. It's your bank. Go pull your money out. Go use it. Do what you got to do. Flip and make more money and put the money back in there and let it keep growing. Like, come on, you guys. We got this. You got this. We're here for you. We're here to help you win.